Hey everyone, how's it going? It's Dan Russo, the Chief Market Strategist at Chaikin Analytics. It is Tuesday, November 3rd at about 12:40 p.m. It's election day here in the United States. It's the day that we have all been waiting for. All the back and forth, all the noise. What does it all mean? Well, for me, we came into the day with the S&P 500 stuck in a range. We've been in a range since the beginning of September. Currently stuck between support at 320 for the SPY and resistance at 340, SPY being the ETF that tracks the S&P 500. So kind of between those two levels, election day is a solid do nothing, in my opinion. In our recent notes to clients, we've laid out a playbook and a roadmap for what we think makes the most sense based on the outcome. And that is in no way, shape, or form are we trying to predict the outcome. I have no idea who's going to win the election. I have no idea if we're even going to know who the winner of the election is tonight. And I have no idea how the market is going to react. None whatsoever. Right? As a matter of fact, I was jokingly tweeting earlier. I said, if you're going to trade the election today, there are three things you have to get right. You have to assume that we're going to know who the winner is tonight. You have to also assume that we're going to have a winner tonight, and you have to assume that what you know is different than what everybody else in the marketplace knows, right? So you have to be right on three fronts. You have to get the call right, the direction, and how everyone else is participating or positioned. That's tough. It's kind of like trading around earnings, which is why I'm not a huge advocate for trading around earnings, because there's a lot that you have to get right in order for the trade to work out, including sentiment and positioning, which are never easy. So I'd rather just lay out a roadmap the way that I always do. And what's interesting is that's no different than any other time of the year. It makes no difference that there's an election tonight. For me, the roadmap is fairly simple. If we're above 320, but below 340 on SPY, we just continue to chop. I mean, you can find some good ideas. You can find some areas in the market that are outperforming. But to me, that's a research environment. That's an environment where you're getting up to speed on ideas, identifying the areas of the market that are holding up the best, identifying the areas of the market that are not holding up, right? Those are going to be the spots that you want to avoid. Now, if we get some sort of result tonight and the market breaks higher through 340, well, you want to be aggressive on the long side of the portfolio in the leading areas of the market. Bearing in mind that some of the leading areas of the market are shifting. In my note today for clients, I actually, for the first time in a long time, highlighted banks. I highlighted the KRE, the regional bank ETF, as being on the verge of what we call a personality change, where it goes from being a big underperformer to gradually underperforming less and less, and then finally getting to the point where it starts to outperform. Now, we're not at that outperformance point yet, but I've seen enough of an improvement there to put it on my radar screen. I think it's really interesting. And even in my note on Tuesdays, I look at relative strength at the sector level. Financials are showing bottoming activity. I'm not going to say they bottomed. I'm not going to say that the trend has turned. It has not. But they are showing signs of bottoming activity, which I think is pretty interesting here in the near term, because it lines up with what we're seeing from an economic level as shown to us by the yield curve, which has been steepening for some time. I've been writing about the fact that the long end of the Treasury curve has been under pressure, sending yields higher. So that's kind of interesting to me. That's the kind of stuff that I'm paying attention to. So if we break 340, I want to be focused on what's leadership. Leadership right now, materials, industrials, potentially banks, certain pockets of technology, although that's been under pressure, certain pockets of discretionary, although that's been under pressure as well. Now, that takes care of the upside. What if the market breaks? Well, if the market breaks 320, I think we could go to 280 on the SPY. And why do I think that is? Well, I get there two ways. First, classical charting, right? If we look and assume that support is at the $320 level for SPY, and we then take the high from back in September, that was $358. That's a 38-point range. If we break support and then subtract that 38 points from the broken support level, so $320 minus 38, that gets us down to around $282. Okay, that's one way of getting there. The other way that I get there is just through kind of traditional retracement levels. If we take the rally from the March lows to the early September highs and retrace 50% of that, that would be about 288 on SPY. So I think if we break 320, you have to start thinking about SPY going to the 280 to 290 area. That lines up with 2800, 2900 on the downside. If we're in between those two levels, it's a solid do nothing. Now, I have said repeatedly, my view is that the most bearish situation is a contested election, and that's obviously still on the table. We're not going to know, have more clarity on that until later tonight or maybe into tomorrow. So those are high-level thoughts for election day. I don't think it makes sense to trade the election. I really don't. I think it makes sense to have a roadmap so that you are responding to what happens rather than reacting on a whim. So we'll be back throughout the course of this week with our thoughts, but just wanted to kind of come in here on election day and let you know what I'm thinking. Be well, be safe. We'll talk to you soon.